So today was one of those days where I made money, but I'm not proud of how I made it. And honestly, this trade could have gone very wrong. Like one of those trades where afterwards you sit there thinking, what am I actually doing? So what I'm going to do in this video is something a bit different. I'm not just going to show you the result. I'm also going to walk you through my entire trade. From the moment I spotted the stock, to the entry, to the mess in the middle, and finally the exit. You're going to see everything. The good decisions, but more importantly, the bad ones. Because I think those matter more. And quickly before we get into it, I'm 13. I'm not a financial advisor. I do the research, I plan the trade, and it's my money. But my dad executes the trades for me. So please, don't copy what I'm doing. Do your own research and make your own decisions. This is just my journey. So let's start all the way from the beginning. Today is Thursday, March 19th. And the stock that caught my eye today was SUNE, Sunation Energy. Now, the reason the stock stood out immediately was the profits. This company reported a 77% increase, which is massive. And that's not just a small beat. That's the kind of number that creates momentum. And in day trading, momentum is everything. And when I saw that, I wasn't looking at anything else. Because stocks like this, they attract volume. They attract attention. And most importantly, they attract traders. And once the traders start piling in, that's where opportunity stems from. Now, if you look at the chart here on the screen, you could see the stock had already made a big move. We're talking 70% run up. So at this point, most people would say, it's already gone, you missed it. But from my experience, that's not always true. Because strong stocks can just keep on running. But only if you enter correctly. And that's where my plan came in. My plan was simple. I wasn't simply just going to chase the stock. I was going to wait for a dip, and wait for the price to come back down. Find a level of support, and then, and only then, can I enter. I wanted confirmation, not just guessing. So, I'm watching this play out live, and I'm seeing the pullback, the volume still strong, buyers stepping in at certain levels. And I'm thinking, alright, this could be the entry. And at this point, everything is calm. And everything is logical. This is how trading is supposed to feel. Now, as you can see on the screen, I actually tried to enter multiple times. But this wasn't just one clean click. I started adjusting, waiting for the right moment, and trying to get a better feel. And eventually, my order goes through. 750 shares at £1.82. And I remember thinking, okay, this is it. Everything's lined up. The dip, the support, the volume. This should work. But almost immediately, the trade starts going against me. And not even slowly, it just drops suddenly. And I'm sitting there, watching it, and thinking, wait, what? Because in my head, I did everything right. I waited for the dip, I didn't start chasing, and I had confirmation. Even the indicators were looking good. MACD was turning. Volume was strong. Relative volume was high. And buyers were there. So why is it dropping? And this is where reality hits you in trading. Because everything looks just right. Just because everything looks right doesn't mean it will go your way. And now I'm down. At one point, I'm down about £70. Now, I know for some people watching this, that might not sound like much. But for me, that's a big amount. And this is where things started to change. Because now, it's not just numbers on the screen anymore. Now, it's emotion. Now I'm thinking things like, I can't lose this. What will my dad think? It has to bounce back. And the moment you start thinking like that, you're no longer trading. You're just reacting. And I'm going to be honest with you. This is the part I'm not proud of. I actually considered adding more to this position. I started trying to average down. Now, in long-term investing, that can make sense. But in day trading, that's dangerous. Because instead of managing risk, you're just increasing it. And I caught myself thinking, this stock has a 70% earnings increase. There's no way it drops further. But that's a mistake because I completely ignored something important. People who bought this stock much lower, they're taking the profits. They're selling into strength, and that's selling pressure. And that's exactly what I was fighting against. So instead of cutting the loss right then and there, I held. Not because it was part of my plan, but because I hoped it would come back. And that's probably the worst reason to stay in a trade. Hope is not a strategy. But then something changed. The price started to recover. Buyers coming back in. And slowly but surely, the trade started moving back up. And I remember feeling relieved. Like, okay, I might actually get out of this. And eventually, I am back in profit. Now, here's where I should have done one thing. Sell. Take the profit, move on. But instead, I hesitated. Because now, I'm thinking, if I can make £100, maybe I can make 150, maybe even £200. And that's greed. Plain and simple. And within minutes, the price drops again, back down. And just like that, my profit starts disappearing into thin air. I risk turning this into a loss, or just take what the market is giving me. And finally, I sold, and ending this trade with £220 profit. Now, if you just look at the result, it looks like a good trade. But if you look how I traded it, it really wasn't. I broke rules. I let emotions take over. I didn't use a stop loss. And I stayed in the trade for the wrong reasons.